Hey everyone, welcome back to the channel. Today, we're witnessing the Financial World Cup, a showdown between two dividend ETF giants, SCHD versus VDY. In the blue corner, from the US, it's SCHD, the Schwab U.S. Dividend Equity ETF. A favorite among investors for its stability, yield, and track record. And in the red corner, representing Canada, it's VDY, the Vanguard FTSE Canadian High Dividend Yield Index ETF, a powerhouse for monthly income and reliable cash flow. We'll break down their performance, dividend growth, holdings, and risk, and by the end, we'll crown the true dividend champion. So grab your coffee, this is going to be fun. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. Before kickoff, let's meet the players. SCHD launched in 2011, tracking the Dow Jones U.S. Dividend 100 Index. It invests in 100 high-quality U.S. dividend payers, think PepsiCo, Coca-Cola, and Broadcom. VDY, launched in 2013, tracks the FTSE Canadian High Dividend Yield Index. It's packed with Canada's biggest banks and energy firms, RBC, TD Bank, Enbridge, and Suncor Energy. Sector-wise, SCHD spreads across technology, healthcare, and industrials. VDY. Mostly financials and energy, over 75% of its portfolio. So, right from the start, SCHD offers more balance, while VDY brings concentrated dividend muscle. Round 1, Income Power. Visual, yield comparison chart animates. SCHD currently yields around 3.5%, paid quarterly, a healthy payout from US dividend growth names. VDY, on the other hand, yields between 4.5% and 5%, paid monthly. That's a key advantage for investors who depend on consistent cash flow. In this round, VDY takes the lead with higher and more frequent income. Scoreboard, SCHD, 0, VDY, 1. Now let's look at total returns, where champions are truly made. Visual, 10-year total return line chart. Over the last decade, SCHD has delivered annualized returns of roughly 11% to 12%. That's impressive for a dividend-focused fund. VDY, however, has averaged closer to 7% to 8% per year, still solid, but held back by energy price cycles and slower Canadian market growth. So, when it comes to long-term performance, SCHD dominates this round. Scoreboard, SCHD, 1, VDY, 1. Now, let's talk dividend reliability, the key to compounding wealth. Visual, bar chart of 5-year dividend growth. SCHD has grown its dividend by about 12% per year over the past 5 years, that's a remarkable rate. VDY, meanwhile, has seen a steadier but slower 4 to 5% annual growth. So for investors focused on income that grows faster than inflation, SCHD wins this round. Scoreboard, SCHD, 2, VDY, 1. Let's peek under the hood, because what's inside matters most. Visual, top 10 holdings comparison chart. SCHD's portfolio includes Broadcom, Home Depot, Coca-Cola, and Merck, a balance of dividend stability and earnings growth. VDY's top holdings, Royal Bank, TD Bank, Enbridge, and Canadian Natural Resources, are strong, but concentrated. That heavy tilt toward banks and oil means VDY can hit hard in bull markets but struggle in downturns. So for risk-adjusted balance, SCHD scores again. Scoreboard, SCHD, 3, VDY, 1. Taxes, not the most exciting topic, but crucial in this match. Visual, two flags, US and Canada, side by side. For US investors, SCHD wins easily, no foreign withholding, great liquidity, and low fees. But for Canadian investors, VDY is the better fit, no US withholding taxes in registered accounts, and monthly Canadian dollar income. So depending on where you live, each ETF has its advantage. Scoreboard, SCHD, 3, VDY, 2. Round 7, how well do these funds hold up under pressure? Visual, drawdown and volatility chart. SCHD shows lower volatility and faster recovery from market dips, thanks to its diversification. VDY tends to swing more with oil prices and bank earnings, making it slightly riskier. So, SCHD stays cool under pressure and wins another round. Scoreboard, SCHD, 4, VDY, 2. And that's the final whistle. After 7 rounds, the score is SCHD, 4, VDY, 2. Trophy emoji, the financial World Cup champion goes to SCHD. But don't count out VDY, it's a powerhouse for Canadians who want monthly income and exposure to the country's most stable blue chips. So whether you're cheering from Wall Street or Bay Street, both of these ETFs deserve a spot on your watch list. Which ETF are you investing in, SCHD or VDY? Drop your answer in the comments below.